So HSA stands for Health Savings Account. And a health savings account is an account that an employee may may contribute to pre-tax dollars to help offset medical expenses. So they can use that health savings account money to pay for anything other ting premiums. So anything up to their deductible and up to their out-of-pocket max, their doctor's visits, prescription drug coverage, surgical procedures, thing that they would normally pay for their for their health plan outside of their premium, they can use that health savings account money for. That health savings account, the employer can also contribute to that. There's a limit to what can be contributed on an annual basis. So you'd have to be careful to make sure you're not contributing beyond the max of that if the employer is contributing as well. So it's a nice account that helps offset those expenses. And the other benefit of a health savings account is that it's employee owned. It stays with the employee. It always belongs to the employee. They don't have to use it at all throughout the year. They can let that accumulate year over year over year and use that post-retirement, or they can use it as they go. It's completely up to them, but they never lose that money. An FSA stands for Flexible Savings Account, and that's a little bit different in that that doesn't belong to the employee. That belongs to the employer. You're still contributing money to it. There's a max amount you can contribute to it. There's certain things you can use it for, but you have to use it or you lose it. You have to use it by a certain period of time or you lose it because that is employer owned. There's a couple different types of flexible savings account. There's a regular flexible savings account that acts very much like a health savings account for the things you can use it for. But then there's also a limited flexible savings account that stacks with a health savings account. So if you have that high deductible health plan, that's the other piece of the health savings account. You have to have a high deductible health plan to be eligible for the health savings account. If you have that high deductible health plan, you can stack a limited flexible savings account with it to help pay for things like dental and vision coverage. So that kind of pulls in a little bit more savings for everybody. Then there's a dependent flexible savings account that you can use that money to pay for dependent care, child care, or elder dependent care. And again, they're all use it or lose it, though. You have to use it by a certain period of time. So there's a maximum dollar amount set by the IRS that you're allowed to contribute on an annual basis. For the health savings account, if you are, again, on a high deductible health plan and you're able to take out a health savings account, you can, for this year, it was $4,300 that you're allowed to contribute as an individual. If you have a family, husband and wife and or family, on that high deductible health plan with you, you can contribute $8,550. And that's total. That means so if your employer contributes some and you contribute some, that's the total that you can contribute. Now, there's a benefit to being 55 and older. If you're 55 and older, you can contribute an additional $1,000 as an individual or a family to the health savings account. For the FSA account, it's a little bit lower. An individual can contribute $3,300 and a household is $5,000. So it's a little bit different on the FSA, but again, it's not a bad way to save some money. Typically, it would depend on the type of plan you have. So if you have a health savings account and a limited purpose FSA, because that's the only FSA you could have with a health savings account, when you go to the doctor, it's going to pull from your health savings account because it's going to recognize that's a doctor visit. Most cases, if you go to the eye doctor or if you go to buy contacts and use your limited purpose FSA, it may pull from your HSA. So typically you apply for reimbursement with an FSA. That's typically how they work when they're stacked together. If you don't have a health savings account, all you'll have is that FSA card, and so it'll pull from there what needs to be pulled. That's the only account you'll have on the card, in other words. Yep. So the health savings account is yours. You never lose it. You can just continue to add money into that year over year over year, and you never lose it. The FSA, the flexible spending account, is the account that you have to use it or you do lose it. And there is a rollover amount. $640 maybe there that you can roll over, depending on if your plan allows it. The plan that you're in has to allow that rollover. Sometimes they allow it to roll over until March, 2 or 3 months after the plan ends, or sometimes they allow a certain amount to roll over for the year. But you do have to use that. And that's a tricky one. I have an HSA and the limited purpose FSA, and it's always a tricky thing to know like how much to put in that FSA on an annual basis because, one year my husband had his teeth knocked out and, from a gardening accident and we used it. And last year we didn't, and I scrambled to use it at the end of the year. So it is a balancing act trying to determine how much to put in. So a lot of times, especially on our dairy farms, they may not want to fund a health savings account or go through the paperwork because there's paperwork involved to put a health savings account in place for your employees, and there's a cost to that. But if you are an employee and you're being offered a high deductible health plan, you can typically go to a bank, a local bank, and they that offers health savings account and set up your own health savings account. And you can either direct your employer to put money into that health savings account through a payroll deduction, or you can do it yourself, or you can, at the end of the year, take that credit on your taxes that you had this health savings account. So you can take that credit on your taxes. If you direct money into that account, then you're right. The bank would probably give you a card, so you wouldn't have to worry about that. Most places, I would say now, most places have benefit cards for these anymore. But if they didn't, you would have to provide a receipt, submit that receipt, kind of like what I mentioned with the limited purpose FSA, provide a receipt to get reimbursed for that FSA money. So you just hang on to your receipts. Don't go buying TVs with it because there are limited things that you can buy with it, but hang on to your receipts anyway, even if you don't have to submit for reimbursement, should you ever get audited. It's important to hang on to those receipts. Sure. So, when we are consulting with a customer on health plans for their business, we, if there is, if the customer is interested in a lower premium. So when we talk about that HSA is only allowed on a high deductible health plan. So high deductible health plans typically have lower premiums. They have higher deductibles and higher out-of-pocket costs, but they have lower premiums. So they tend to be an affordable option to offer on a group benefits level for a cost-conscious customer. Sometimes they offer them alongside of other plans. They might offer them alongside of a lower deductible plan so that people have a choice. High deductible plans sometimes get a bad rap because their deductible is so high and the out-of-pocket is so high. But if you're young and healthy and you rarely use medical insurance, it's now just kind of a catastrophic coverage for you. You're just being covered in case, right? Um, so that's where the HSA comes in, is with that high deductible health plan. And that's the kind of consultation we'll have with them. We'll pretty much say what I just said. We'll talk about the differences between the metal level plans, the deductible level plans, and show them how they can offer this lower deductible, or rather higher deductible plan, lower premium plan, but then give the benefit of an HSA for the employee to help them offset that high deductible that they may be faced with when they do use it. So we do talk about that. We work with a vendor that will help install that health savings account for them. It's pretty seamless. It's pretty easy. It does come at a cost, but it's not exorbitant. But we do help them with that and let them work with that vendor directly, kind of take us out of the middle and let them work with that vendor directly, just facilitating any needs they might have along the way.